Hello and happy new year. I guess it's not too late to wish you guys a happy new year, right? We're only about 5 days in. Now, indeed, it has been a happy start to 2026. Bitcoin up over 5% so far this year. But of course, we are not going to read too much into price action from just 5 days. Look, we've got another 360 days to go now. So we got to take a longer term outlook for this live stream. Now, clearly, you are starting off this year on the right note by joining this live stream. Thank you, thank you, thank you. My name is Han Tan. I'm the Chief Market Analyst here at Bybit. And in just a bit, I'll be joined by experts from Block Skulls. Now, today, we are going to share with you our outlook for the crypto space for the year ahead, including expectations for Bitcoin prices this year. So let's jump to the slide. Here's an outline of what to expect in this live stream. So we're going to talk about this term you may or may not be aware about, the 4-year cycle, right? And how it pertains to the 2026 outlook. Of course, even for the near term, we've got key events coming up already, okay? Not just what happened over this past weekend, but also for the rest of this month. We're going to give you a heads up. So that's why you are here, so that you can make better informed decisions in the markets. Of course, then we'll look beyond just Bitcoin. We'll also look at the broader crypto space to highlight some key trends to watch. And ultimately, we'll end with arguably what you are most likely, most eager to find out, which is our expectations for where Bitcoin is headed for this year. All right, now before we bring in our friends, just a quick reminder here. If you are yet to be a Bybit user, if you have yet to enter the Bybit universe, we've got a giveaway on the next slide here. So make sure you scan this QR code. Or if you're joining us on the Bybit Learn YouTube page, the link is right there below. Make sure you hit that subscribe button and also click on the link so that you can sign up for a new Bybit account. And that way you can get your share of 20,000 USDT in rewards that we'll set aside just for this live stream. Similarly, if you're joining on the Bybit Learn X handle, that's at Bybit_learn. The link is there as well, so make sure you sign up there. We have it on the Bybit website, wherever you're joining us from, okay? Make sure you sign up and don't miss out on not just these key expert insights, but also some rewards that can help you in your journey, all right? So with that said, let's go ahead and bring in our friends from Block Shows. We've got, I believe, Andrew and Eamon on the line here. All right, hey guys, morning and a happy new year to you. You know, for here, as you can see, it's a sunny Dubai. I know you guys are in the UK, so hopefully the weather is not as dreary as it stereotypically is this time of year?
It's awful, Han.
It's awful. Yeah. Well, I'm glad I'm here, but I'm glad you are here also on this live stream. All right. So let's get right to it. Okay. So earlier we mentioned, or we teased, this 4-year cycle, and let's bring up the next slide here. So for those who are perhaps not familiar with this, let's start with you, Andrew. Just give us a quick breakdown on what this whole 4-year cycle thing is about.
Yeah, for sure. It's essentially the roadmap that crypto has been following for nearly 16 years now. So that's 4 cycles, starting in 2008, 2009 with Bitcoin. It's the cycle that takes Bitcoin to new highs, usually at the beginning of the cycle, just after a halving. So about 6-7 months after a halving. And then capital generally flows to other cryptocurrencies like large cap altcoins. So capital starts off in the big names like Bitcoin and ETH, and then sort of trickles down, roughly aligning with the halving. But yeah, as we'll see, some questions on what's actually causing that pattern to repeat.
Yeah. And in fact, on the next slide here, we're actually going to start this live stream on a dangerous note, isn't it? And we pull up this next slide here. We've got this very famous quote by Sir John Templeton. He's a legendary investor, philanthropist, and, definitely a big name when it comes to the markets here. And he says, and I quote, "The 4 most dangerous words in investing are this time it's different," end quote. But Eamon, it seems like we're actually framing our 2026 outlook with this very notion, right? But hey, maybe in 2026, it's actually going to be different from that 4-year cycle now, isn't it?
Yeah, sure. No, absolutely. I mean, it's very interesting. You hear that statement quoted in a different way sometimes, where we say, history perhaps doesn't repeat itself, but it definitely echoes. So even though this time around the cycle seems slightly different, and we'll discuss that in a little bit more details in a second, in the core of it, the structural drivers are still the same, and hence the echo, right? I think the main difference this time around is that the cycle, because it's becoming a little bit mature, is actually extending in time and perhaps reduce in volatility. So we're not getting the magnitude of the drawdowns that we've seen in the past, but also, as we're going to discuss in a bit, the length of the cycle seems to be stretched a little bit longer versus the historical 4-year cycles, if that makes sense.
Yeah. So and in fact, in the chart that you were referring to, it's actually up here on the screen here. So we'll go to slide number 6 here. So we have this title of the 4-year cycle, bent now broken, right? So talk to us, Eamon, through what we're seeing here on the screen.
We are looking at basically the market cap percentage for Bitcoin, and we are using the pivot as the halving, right? It's like days going into it and days coming out after past it. As Andrew mentioned previously, historically what we saw is that a lot of money flows into Bitcoin for structural reasons, right? The halving means there is less Bitcoin is being issued, so it's deflationary, the price goes up for fundamental reasons. And then when you have this bullish move, people will start to kind of take profits in Bitcoin and shift that capital into perhaps underpriced or underperforming altcoins, and we get this kind of shift from Bitcoin to other tokens, the so-called altcoin pivot or shift, right? And this time around, we haven't seen that. In fact, Bitcoin continued to dominate for much longer. We don't necessarily think it completely broken the historical trend, but we question whether actually this time around, to your point, is slightly different, where it might take a little bit longer for this so-called alt season, if that makes sense.
Yeah, indeed it does, and this chart is certainly very telling. At least when judged against historical patterns, whereby you're right, Bitcoin has still remained solid versus altcoins, and by Bitcoin I mean its market cap relative to the total crypto market cap, right? As this chart shows. So this is perhaps one sign, one telltale sign that things could be different this time around. That the traditional 4-year cycle may not, we may not adhere to it as much, right? And going to the next slide, Andrew, perhaps you can talk us through this. It seems to be this is another sign that perhaps it is different this time around, isn't it?
Yeah, very much the same as in the previous charts. So it's not just a question of, is this cycle going to be different? This cycle is already different for a number of reasons. So as we saw in the previous chart, Bitcoin's dominance of market cap is still far stronger than we'd expect it to be this far into the 4-year quote unquote cycle. This chart again shows exactly the same. So what am I showing you here? This is the drawdown in Bitcoin price from its previous all-time high all the way back to 2013. So about 13 years of data here. So here you can see the 4-year cycle. When we talk about the 4-year cycle in Bitcoin, it is these large, almost hammocks that you see in that gray line here, where Bitcoin hits all-time highs repeatedly, day after day for around a couple of months. Then it falls by about 80%, and then spends the next couple of years recovering back to its previous all-time high before going on to march to new all-time highs over and over again. So what are we seeing in this current cycle? Well, that period of all-time highs being hit over and over again is far, far longer than in previous cycles. So if you look at just before 2018, so late 2017, and just before 2021, November 21 was the all-time high there. You see that period lasts maybe half a year to a year. We are well into that period now, ever since March 2024, when we hit the all-time high. And that almost gives you a little bit of a clue to the reason why we think this cycle is a little bit different. What's causing that difference? It's not a difference in supply. And I think we'll come on to this in a slide in a sec. It's not a difference in supply side, it's demand side. We have a new source of demand. And I think it's very relevant that all-time high was hit just after ETFs were launched in March 2024. And I think that's what's also causing the reasons that we see the chart diverge a little bit in the previous chart as well.
Yeah, and now before we go on to that next slide that you alluded to earlier, yeah, so I think this chart, I like how you described it as those hammocks, right? So we have seen those 4-year cycles. This time, it's a very tiny hammock, barely fits, big boys like me. It's a very small hammock there, baby-sized hammock, i.e., the drop from that all-time high is only about 36%, less than half of the kind of drawdowns that we've seen in previous cycles, right? Which then begs the question, well, why, is it different this time? And let's go to the next slide here. And I think this really encapsulates how macro-sensitive cryptos and especially Bitcoin really has been over the past couple of years now, isn't it, Eamon?
Yeah, no, absolutely. And I think, perhaps I can draw on my past experience in traditional finance to try and kind of cast some light as to why these things are happening and the changes that we've seen and why the cycle is slightly different. This is kind of like a typical, features of an asset that is maturing. As and when it matures, the players that are participating in this ecosystem become a lot more institutionalized, and that's what we've seen for Bitcoin, and that results in it falling into the so-called macro basket. And because of that, a lot of the macro drivers start to have a lot of influence on this particular asset price, right? So I think the reason this cycle is different is twofold. As Andrew said, one, the demand base has changed quite significantly. So we have a lot more institutional players via the ETF. And that actually resulted in Bitcoin continue to dominate the crypto space for much longer, because that capital shift from Bitcoin to altcoins is not as pronounced, because a lot of these new capital is flowing straight to the ETF. And then because it's becoming a little bit more institutionalized, the macro factors become a lot more of an influence. If you could just post the slide again, sorry. So some of the major things that led into the price action in Bitcoin that we've seen in the past 18 months is the Fed, and also on the regulatory space, what happened post Trump election and the change of the SEC leadership. It's having a huge impact on the asset price, and that's why we've seen this prolonged period of a rally for Bitcoin versus historical trends.
Yeah, and also, just to kind of give you an update here on the live numbers that we are seeing in terms of markets predictions for Fed rate cuts. I'm looking at the Fed funds futures right now. So for a March rate cut, that's March 2026, or for the FOMC meeting there, markets now predicting a 53% chance of a rate cut by then. For the January one, the January FOMC meeting, those odds now at about 17%, but for the entirety of 2026, markets still pricing in about a 31% chance, or about a 1 in 3 chance that the Fed could actually cut interest rates 3 times for all of this year, right? So, Andrew, how important are the Fed rate cuts in relation to, all the other bullet points that we're seeing on the screen here? Is it arguably the most important driver here?
Arguably far more important than it's ever been for crypto, especially given the macro drivers that Eamon mentioned. So the sensitivity that we have, people that are buying crypto now, it's now for different reasons at different times, by different people in different baskets of portfolios than it was in the past. So far less retail driven now and far more institutional. But why do we care about the Fed? Well, they're in charge of the largest central bank in the world. They set interest rates in the US. As we talked about in our last live stream together, these guys are responsible for setting interest rates at the front end of the curve, which is really a key driver of risk sentiment. So we see crypto as a risk-on asset, justify that via its correlation to other risk-on assets like the US equities, which are now at all-time highs or very close to it over the Christmas period. Far more important than it's ever been, but not the only driver, crucially. Markets care about this because it gives an idea of liquidity in the system. As you said, markets are expecting 2 to 3 cuts this year. We'll see whether that gets delivered or not. We're also expecting a slightly more dovish chair to replace Chair Powell this year. Trump, whoever he picks, is likely to pick a very dovish chair for the Fed. But we'll see that decision being made sometime, I think, in January.
And just to quickly add to that, if I may, to kind of summarize why the Fed matter, you could just relate it to liquidity and global liquidity. This is the core of the point here. As they cut interest rates or they embark on QE, all that means is that the global liquidity is increased, and that is usually very good for risky assets in general, right? Because it tends to lead to asset price inflation, as we've seen in the past many times. Now, there is a question mark next to, again, if this time is different, because we've seen the measure of global liquidity via M2, etc., is increasing quite a bit, but for the first time, Bitcoin don't seem to be following that. But again, I think that's because the core players in the space have changed, and they have their own cycle of investment. A lot of these folks will delay deploying huge amount of capital towards the end of the year, and they will be deploying capital at the beginning of the year, in January, February, etc. So that perhaps might be one of the reasons why in the past couple of months, as the market awaited to see what the Fed would do in December and understand what the landscape is going to be for 2026, they probably delayed some of the investments, and perhaps we'll see some of that coming through in Q1 of this year.
Yeah, and you raised a really good point there, Eamon, because in our joint research and analysis, we have found that the correlation between, say, cryptos or Bitcoin and, say the S&P 500, there is still that positive correlation, right? It's just that that positive correlation is perhaps not as strong, at least in Q4 of last year, compared to what it was before, right? And perhaps similarly, that correlation between M2 liquidity levels versus Bitcoin's really tepid end to 2025, that has been quite lackluster, right? So the idea for a lot of our outlook is, you still have this correlation, and it's not too much of a stretch to think that, hey, these relationships can snap back, all right, again, very quickly if the macro conditions are right. So I think that's what we are outlining here, at least for the 2026 outlook. And now for the third bullet point, I want to rely, Eamon, on your former TradFi career here, because I know you used to trade a lot of these assets tied to what the Bank of Japan does and surrounding the Japanese economy. Talk to us about the major downside risk here about the Bank of Japan's policy tightening, because we already saw last year how JGB, that's Japanese government bond yields, have risen to record highs, at least on the 30-year. And there's a lot of uncertainty about how the Bank of Japan, how much they could tighten their policy settings for this year, right? Why is this important for the crypto world? Why is this important for those listening right now?
Yeah, absolutely. Look, without kind of like making this particular point too complicated or diving into the weeds of it, but just very high level, the concept is relatively straightforward, right? Central banks around the world, when they ease monetary policy, they increase global liquidity, and that tends to lead to more investment and rally in the markets, right? And historically, central banks coordinated their actions, right? It wasn't very common for one major central bank to be easing interest rates while the other one is actually tightening. This time around, we find ourselves in a very unique position where one of the major central banks, as you mentioned, the Bank of Japan, is actually in the process of tightening monetary policy, whilst the other major central banks, including the ECB and more importantly the Fed, are actually easing monetary policy. Now, why that is important is because it impacts one of the main trades that are used in traditional finance, the so-called carry trade. What that trade is very simple. You borrow in a place that has very low interest rate to invest in a place that has higher interest rates or riskier assets. And Japan used to be the darling funder for speculators or investors because historically it had very, very low interest rates compared to the rest of the world for a very long time. So these trades are quite large in magnitude, and any reversal or any hint to these trades of being unwound, it could generate a lot of fear in the market, as we saw in August of 2024. Now, if we're in a situation where the Bank of Japan is tightening and the Fed is easing, that increases the chances of these things becoming, or at least the Japanese market being less attractive for funding, and that could create some of these volatility. We don't think it's a major risk for now, because actually what we should really care about is the spread between US rates in the long end and the Japanese rates in the long end as well. And it's true that the Bank of Japan is tightening and the rates are moving higher, but I think these spreads are still significantly wide enough that wouldn't generate a major immediate risk. But it's definitely something to keep an eye on for sure.
Yeah, and just to put things into context here, when it comes to the Bank of Japan's policy outlook, markets are right now pricing in a 72% chance that the Bank of Japan could hike their interest rates twice this year. All right. So for the Fed, it's 1 in 3 chance that they could cut by 3 times. Well, that's on that side of the Pacific. Whilst Japan, 70, or now updated again, 74% chance that it could hike twice this year. All right. Now, before we go to the next slide here, Eamon, I still want to come back to you on this, because now, granted, we are doing an annual outlook here. These are some of the key risks and events that we have to keep an eye on. But hey, given what just happened over the weekend between the US and Venezuela, it kind of tells us that there's a lot of humility when it comes to any attempt to forecast in the future, because this weekend's geopolitical events just kind of tells you that markets are full of surprises. The world is full of shockers, and you just can never tell what could happen on a day-to-day basis, isn't it?
No, absolutely. And that's why, you know, when you make these predictions, you have to be very careful. The way we always kind of approach this topic is to try and figure out what's the possible different outcomes of the world in the future and assign the different probabilities to them. And our forecast will be based on the outcomes that we think it's most probable, but we never take it for granted that this is the only outcome. We still keep an eye on all the other different possible outcomes, and we take new information as it comes in, and to make sure we analyze that to see whether that is significant enough to change our outlook, or actually we're still in the right spot or the right track. Now, what happened over the weekend is that it's exactly one of those events that kind of forces us to quickly go back to the whiteboard and reassess the situation. I do think geopolitical risk remains the main unpredictable risk in the coming years, as we've seen in the past. Is they're very difficult to analyze, they're very difficult to predict, and more importantly, almost impossible to understand really how they impact markets on the very short term. Very long term is kind of easier to analyze, but we're talking about 1 or 2 years impact. That's less relevant when you're trying to assess what will happen to the market over a period of 6 months to 9 months. So trying to understand what that means immediately is very difficult. I think so far, at least, what we've seen happen between the US and Venezuela, and what the implication in regards to other things that they could do, given that they opened the door potentially in terms of how they would act with certain regimes out there. So far, it seems like the market reaction is relatively muted. I think, if anything, this will actually increase the positive sentiment, because if we had one of the major geopolitical risks being kind of addressed, and the market kind of seemed to weather it, that's actually a very strong vote of confidence that we actually could weather this and continue to focus on the structural drivers, if that makes sense.
Yeah. And, in fact, just as an anecdotal add-on here, over the weekend, I was chatting with the social media team to try and preempt how markets may react. And sure enough, as expected, gold rising because of that safe haven play, oil prices, falling maybe because of those subsiding supply fears. But what's interesting is that Bitcoin and the S&P 500 risk assets, S&P 500 futures, they didn't really seem to care. Bitcoin seems to be rising right now. Of course, this is well before the US market opens. S&P 500 also, futures also rising right now. So yeah, they seem to be taking it in stride here. But of course, we have to stay vigilant over the course of this year. And on to our next slide here, Mr. Super Producer Ibrahim, and so with that in mind, all that Eamon and Andrew has shared with us, just over the coming weeks, we've got plenty to look out for. By the middle of this month, or by next week, really, you've got this very important decision by the MSCI about strategies placed in MSCI stock indices. Andrew, I'll have you talk about that in just a bit, but then later in the month, you've got the Bank of Japan rate decision, and of course, the Fed rate decision later this month. But arguably, beyond whatever may happen on the geopolitical front, this MSCI decision risk, we have known about this for a few months now, since the MSCI announced that they'll be reviewing strategies placed since October, I believe, right? So tell us how important this is, between now and January 15th.
Yeah, an important date to keep in the calendar for sure. Look, why is this important? MSCI set the rules for their indices that are followed by a bunch of baskets or a bunch of funds following those indices. Whether or not they include strategy is still to be seen, but this date has been known, as you said, for a couple of months now. So a lot of that uncertainty I would expect to be relatively priced in. Why do we care about strategy? Well, digital asset treasuries are the other side of this demand side coin that we've not spoken about yet, at least today. This is really the other big differentiator for this cycle, where we have not just strategy, but Bitmine in Ethereum, accumulating a lot of crypto assets, holding them on the balance sheet. Essentially, their reason of being is to hold crypto, right? So one of the reasons that MSCI are looking at this decision is to see whether, okay, are these companies valid to be included in equities indices, or should we look at them as a slightly different asset class or a slightly different instrument? So do we care about digital asset treasuries? For sure. Strategy and Bitmine are by far the ones to watch, just because they hold, I think, around 3.2% of Bitcoin and Ethereum respectively. Bitmine's target is 5% of the Ethereum supply, which is really a significant amount, especially when supply is relevant for security or network security, as it is not in Bitcoin. Do we see this as a big risk? A potential one, to be sure, especially from a psychological perspective. But MicroStrategy's, or Strategy as they're known now, their net asset value has been falling for a while, is now below 1. So their market cap of their equity is below the value of Bitcoin held on their balance sheets. We do not see this as the largest risk. The largest risk for them is their ability to pay out the dividends that they've promised, that they've raised equity on the back of. Thus far, they seem to be able to do so. They announced a $1.4 billion cash reserve set aside to do that, and then upped that again in December to, I think, $2.19 billion. Thus far, that is the key risk to follow. That crucially is not at risk from the MSCI decision. What's at risk for the MSCI decision is their market cap multiple. And we've already seen that slip below 1 without huge impact just yet.
And just to recap, folks, earlier in this live stream, it already showed on slide 8, how besides ETFs, it's these digital asset treasuries. They are also seen as a new source of demand, which is perhaps contributing to this idea that is the basis for our crypto outlook for this year, that there's new sources of demand, and that's perhaps what could break the 4-year cycle for 2026, right? Which is certainly showing very different characteristics this time around. Okay, folks, we're coming towards the end of this live stream, but real quick, just a quick reminder here on slide 10 here that we do have a special giveaway just for new users. If you have not signed up for your Bybit account yet, make sure you scan the QR code or click on the link on the YouTube video or on the X platform that you're watching this from, and you can sign up there, and that way you can get your share of 20,000 USDT in rewards that we have set aside just for these live streams. For the Bybit OG users, we hear you. Don't worry, scan the QR code as well, or click on the link. You can get to a page where you can be in the running for more weekly rewards. You just got to check out the different tasks that you can take part in and make sure you complete them so that you can get your additional rewards as well. Okay. All right, folks. Now I just want to quickly show slide 11, but I won't dwell too much on this here because beyond now, of course, we've been talking a lot more about Bitcoin for this live stream, but just so we have highlighted some other key trends to watch as well. So when it comes to the altcoin space, we have called it the year of the crypto with a K there, thinking of a K-shaped recovery. There is this separating of the wheat from the chaff when it comes to the altcoin space and indeed the broader Web3 space, really. I think with what Eamon mentioned earlier about this maturing in the crypto space, I think investors are a lot more discerning when it comes to where they actually park their money, or which projects and which tokens they actually park their money into. Something to look out for. Now, this is, of course, the next bullet point, tokenization of real-world assets has been an ongoing trend that certainly picked up a lot of steam in 2025, and we expect the momentum to continue into this year as well. And then quantum resistance, very quickly here, Eamon, right? Talk to us about some of these projects that are actually trying to future-proof themselves against the threat of quantum computing.
Yeah, no, absolutely. And to be honest with you, this is something that has been floating around the space of crypto since its inception. And it's quite interesting, the minute you recognize how actually the blockchain operates and its reliance on cryptography, the first thing people think about, well, how about if quantum computers will be able to kind of, break these kind of cryptographic functions, etc. This is not something that we are hugely concerned about. We do think that Bitcoin itself has the setup to be able to whether even if quantum computing has become a reality anytime soon, which we don't think so. But the other protocols, including Solana and Ethereum, they are actively trying to put measures in place and working with projects who are looking to deliver the necessary kind of technological development to ensure against this. And Andrew, maybe you want to add something to this.
Yeah, absolutely. So through Ethereum, for example, they have a pattern of repeated upgrades to the network. So we've seen that multiple times in 2025, in 2024, and then going back to the merge in 2022, which was the biggest one. Resistance to quantum computing is an explicit part of the roadmap in the future. So not just looking at expanding their network in terms of number of transactions that they can process per second, but also looking at resistance to quantum computing's breaking cryptographic functions. We're seeing that not just in Ethereum, but as Eamon mentioned, Solana as well. This is really a theme we're seeing pick up quite a lot, but notice that it is not necessarily the first time that we're seeing quantum computing being a buzzword, especially in crypto. A lot of the names getting attention this year or recently are blockchains which have been building on this theme for quite a while now.
Yep. So key trends to look out for in 2026. All right, folks, now on to perhaps what you are most looking forward to. Where is Bitcoin headed in 2026, which is the next slide here. All right, so we're going to show you some, some signs or signals that are coming out of the options markets versus a poll that we ran for Bybit Learn users on our X platform. Again, you can find that at Bybit_Learn. That's the X handle for Bybit Learn, at Bybit_Learn. And then, of course, then we will perhaps wrap things up with our official take on where we see Bitcoin prices headed in 2026. So next slide here, super producer Ismail. So this is what the options markets are telling us right now. So about a 10% chance of Bitcoin hitting 150,000 by the end of this year. Now, to be clear, like literally just days ago, this was in the single digits, wasn't it, Andrew? But now it's ticked up higher, perhaps having that positive correlation, markets being maybe a bit more bullish given the 5% or so gains that we've seen in Bitcoin over the last 5 days, isn't it?
Yeah, absolutely. As Eamon mentioned, we're not the only ones who are seeing this in terms of a probability distribution. We're taking this probability and inferring it from the prices of options. So we look at options prices expiring every month in 2026 and backing out an implied probability of the Bitcoin price being above 150K on that date. As you rightly mentioned, just a couple of days ago, we were looking at this, it was 8.2%, I believe. Now slightly higher as Bitcoin's ticked up. Bitcoin spot prices ticked up in the last couple of days to around 91K. We're not saying that this is necessarily the truth, but we're using this as a really helpful handle to calibrate our own probabilities. We don't necessarily agree with options markets here. We definitely think that 10.3% is on the slightly lower side for a probability like this.
All right, and Eamon, I'll get your take in just a bit, but let's go to the next slide first here. So you've got the options markets, assigning a 10% chance or so of Bitcoin hitting 150K. But when it comes to Bybit Learn users, this poll was actually sent out in the middle of December when Bitcoin was just kind of going nowhere. And to be clear, Bitcoin is still within that 84 to 95,000 range that it has adhered to since the last week of November, just moving sideways here. And so when this poll was issued, looks like Bybit Learn followers were split on whether it could be a bullish rise to 150K or down to 90K, right? But with all that in mind, what we're seeing from the options market, what we're seeing from social media polls, we'll go to this next final slide here. And so for this live stream, here's what we are saying, quote, we assign a higher chance of a new all-time high around 150,000 in 2026 than that which is implied by markets, end quote. Like Eamon, talk to us about how much conviction we as Bybit Learn and also Block Trolls have around this statement here.
Yeah, no, absolutely. Look, I would say a month ago, when we were having a similar discussion with a lot of our clients who happens to be, more on the institutional side, whether asset managers or hedge funds and other traders, we seem to be in the camp of few that were relatively more bullish where Bitcoin could be heading in 2026. A lot of the pushback that we had is related to a lot of the stuff that we discussed already, right? This 4-year cycle, the breakaway from the trend in relation to the global liquidity. Global liquidity is increasing. Bitcoin price seems to be staggering. All the kind of fear and risk in regards to MicroStrategy and all of these other different factors. And in my mind, actually, we are more focused on fundamental drivers and structures in our analysis. That is driving our conclusion. And in fact, when I see a lot of the market is throwing a lot of this fear factors at the Bitcoin price, and it seems to be weathering it at these prices, to me, it gives me more confidence. Actually, we might be heading into the direction of more correction and reaching an all-new time high. And I think definitely the market is not priced for that. And we see that in the options market, assigning a 10% probability of hitting 150K or above next year, it seems relatively low in our view, given the fundamental drivers. So in conclusion, if we cut through the noise and the fact that a lot of people has already addressed or advertised all these bearish factors, and the market seems to be holding up, in fact, I actually think we might get some of the leverage short positions being washed out as some of these bearish views don't materialize and people start giving up on those. So in totality, we see the global liquidity factors. It might be delayed because of the nature of the new investors and they're having their own cycle of investing. It should be a positive factor for Bitcoin. We think the fact that we had a decent correction since the all-time highs in October, it makes the asset class relatively cheap versus other risky assets like equities, etc. But more importantly, versus other assets, including gold and silver and the recent rally we've seen in commodities. So even from a relative value point of view, Bitcoin looks relatively cheap and has a room to outperform. And then the fact that this cycle is taking a little bit longer, in our view, is just a clear indication of the maturity of the asset class and market. And taking all these factors, we think the balance of probabilities is giving us a clear indication that there is a very, very good chance that we see an all-time high next year. And definitely the market is not pricing for it.
This year, you mean? All right. So yes, it is 2026 already. So let us know in the comments wherever you're watching from, be it on the Bybit website or the app, or on the Bybit Learns YouTube channel. We've got the live chat open there, or on Bybit Learns X handle, that's at Bybit_learn. Let us know. Do you have conviction that Bitcoin could hit 150,000 by this time next year? We've got this time. Maybe next year. Well, at least the end of 2026. We've got 360 days to go. Earlier today, Bitcoin hit the 93,000 handle for the first time since December 12th. I think, that 100,000 psychological level, if Bitcoin can reclaim that big round number, I think, going back to Eamon's point there, there could be a bit of that FOMO coming back in, perhaps going into the later part of this year, whereby we could see that new all-time high. Put it another way, right? I think personally, I'd be surprised if we don't see a new all-time high for Bitcoin this year, given all the macro factors we've outlined earlier, the Fed rate cuts, the expected Fed rate cuts, the new sources of demands from ETFs and digital asset treasuries, right? So we, of course, have to wait and see how this year pans out. Still very much early days. Plenty more time to go, but we'll certainly keep you guys informed and up to date right here on Bybit Learn. Look, we've got one question here coming in, and I'll throw this to you guys here. The question is, what are your thoughts on alt season this year, 2026? I'll let either of you take it. We had kind of alluded to it earlier, going back to the idea of the crypto, start with a K, with a K-shaped recovery expected for altcoins this year now, isn't it?
Yeah, and again, I get the sense that we are in a camp of few with our core view here that actually maybe alt season is finally here. Part of the reason we think that is because some of the altcoins are also reaching that level of maturity where the institutional investors are getting a little bit more confident and comfortable with it. And one of the things that is leading to that is the launch of ETFs for particular altcoins, right? Be it Solana or a few others. And also, I think there's fundamental reasons why certain altcoins should actually pick a bid and perhaps rally. And these are in relation to the projects that are being built, either on certain protocols or linked to these certain protocols, whether it's DeFi related and stablecoin related, or in relation to tokenization of real world assets, and where these tokenized assets end up being traded as a perp in certain exchanges, and these exchanges have their own tokens that trade as an altcoin itself, and that could lead to outperformance of those particular tokens. So again, I think there's fundamental reasons why some of the tokens away from Bitcoin should catch a bid. And that lines up nicely with the fact that some of the institutional capital is started to feel comfortable and is drifting or flowing through to the altcoins as well. And all of a sudden, we can find ourselves in a situation where, again, to bring it back to the start of this conversation, this time is different, where actually we have both. Bitcoin is rallying to all-time highs, but also altcoins are catching a bid, and we finally see the alt season, if that makes sense.
Yeah, and really quick, Andrew, but here's the thing, right? We did see ETF launches for these altcoins even from last year, but it didn't really translate into a pop in some of these altcoin prices, right? Be it Solana ETFs and what have you, Ripple ETFs, Dogecoin ETFs even, right? But, it clearly wasn't enough to buttress against the 10-10 liquidation event, really. So will that ETF wrapper really be a definitive game changer for 2026, you think?
Yeah, the timing of the launches of those ETFs couldn't have been worse for, I think, Ripple, Doge, XRP, and Solana, the 4 altcoins to get an ETF launch. Really didn't get the same impact that Bitcoin and Ethereum did. Ethereum got it at a lag, but Bitcoin definitely when they had their ETF launches. But I think it's worth looking at the bigger picture there. That happened during a part of this cycle, of the liquidity cycle, where crypto was selling off very strongly, a lot of long positions getting liquidated and have not yet come back. What I would say is that flows to those altcoin ETFs have been consistently positive across almost all. I think Solana is the only one to have a significant outflow on any one day since launches. And the launch of these ETFs is really what drives our view of this K-shaped recovery, right? As Eamon said, those altcoins with fundamentals, I think, will outperform naturally. But also for a technical reason, ETFs are allowing institutional capital to now flow from Bitcoin and Ethereum, where people have made quite a lot of their profits already, or taken a lot of those profits. They're now able, for technical reasons, to pass into the walled garden, as we call it, of ETFs in altcoins as well.
Yep, definitely. And so again, as you mentioned earlier, perhaps 2026, the year of crypto, spelled with a K. We expect a K-shaped recovery, like Eamon and Andrew mentioned earlier, perhaps looking more at the fundamentals and the ETF wrappers, what that could dictate whether investors are selectively investing into these projects. All right. Look, folks, it is now 45 minutes past the hour. Thank you so much for joining us on this live stream, which we held specially just for you because I didn't want you guys to preempt us here. We are having this live stream because we have just launched Bybit's first ever crypto annual outlook with our good friends Block Shoals, and that's what you saw on the screen earlier. You can find that report on the Bybit Learn website. The URL is learn.bybit.com, and if you can pull up that article again, and that's exactly what you see. You can scroll on down. We've got some summarized bullet points for you, but then at the very bottom you can also download the full report that we have prepared for you. You've got plenty of time to go over that 30 plus pages, and also if you want to rewatch this live stream, you can find it there as well. So again, that's learn.bybit.com and click on Crypto Insights, and we have that report, the first ever inaugural Bybit Block Shows crypto annual outlook just for you. And that's why we have this live stream. Go check it out there. And certainly it remains for me to thank our good friends at Block Shows for not just helping me with that report and that first ever report, but also for this live stream. Thank you so much. Perhaps before we end this live stream, let's perhaps end with this though. Let's start with you, Eamon. For crypto, right? You know, what are you most excited about in 5 words? I know I'm putting you on the spot here. I'm going to buy you a few more seconds. In 5 words, what are you most excited about in Bitcoin or in cryptos?
Tokenization of real world assets and trading those as perps.
Okay, I'm not sure whether that's 5, but I'll let that slide. Andrew, what about you?
Yeah, I'm not sure about 5. I think more of the same. I think we're just at the very beginning of the impact of Trump's election, the regulatory environment in the US, and the influx of institutional capital. Yeah, that's definitely not 5 words.
I probably cheated there because I was already obviously formulating my own answer before I posed it to you there. So mine would be Bitcoin new all-time high. Although now in hindsight, my English teacher is going to yell at me because all time is hyphenated. So that's probably counted as 1 word. So there's only 4. You know what? We'll let it slide. We'll see, right? Whether Bitcoin hits 150,000 or at least a new all-time high by the end of this year. Thank you so much for joining us on this live stream. Go check out our annual crypto outlook report available at learn.bybit.com. Until next time, I'm Han, and on behalf of Andrew and Eamon, thank you so much, and we'll see you next time. Take care.
Thank you very much. Happy hunting.